neat thing about Bitcoin is that it's a digitally native bear asset. So in this world that's increasingly focused on e-commerce, long distance payments, and things like that, the fact that Bitcoin is digitally native is very important. I've been using Bitcoin as a diversifier, but essentially what Bitcoin is basically a technological invention that can make basically it solves digital scarcity, right? So it's like a digital asset that can't be copied. My base case is over the next 3 years or so to see continued dollar weakness from here. I do think that we're probably on the down leg of a significant, if you look at back in the last 50 years, we've had this giant kind of like 15-year gyration in terms of these big multi-year bull markets and then bear markets in the dollar. And I do think this is likely, most signs point to it being kind of the third major bear leg of that long-term cycle. Yeah, but there are curveballs that can throw that off course for a couple quarters. And so, as an example, I turned bearish on the dollar back in late 2019 and started to weaken, as planned. But then, of course, the coronavirus came around and all the different effects out there in the economy, result in that shortage that pushed it up. And so it's one of those things where the lower probability event became kind of a temporary that would actually happen until, of course, we got past that and then continued with the down leg of the dollar. And so overall, I do have a longer term outlook that is pretty negative for the dollar. But whenever it gets to consensus, that's when you get a bounce. So for example, when we went into this year 2021, that's when positioning was really negative on the dollar, and so we got that kind of 3-month bounce to clear out some of that consensus. And lately we've been going back down again, and really what I'm watching to see is if it breaks a couple of the key support levels, breaks the previous low that it set in the beginning of this year, compared to a number of currency pairs. It already has for a few, and then next I'm watching to see if it breaks past the the early 2018 bottom that it had against some other currencies. So I do think that fiat currencies are not very attractive in this current environment. So Ray Dalio, for example, referred to cash as trash, and I think that's it's a colorful way of saying that basically you're getting little to no interest rates, in some cases negative interest rates, to hold cash, and yet the inflation rate is in most countries positive, in some cases strongly positive. And so you're not keeping up with the rise in prices. And so if you're holding cash in a bank, probably 5 years from now you're going to have notably less purchasing power. Even if there's no major inflation spike or major kind of reset or something like that, just the sheer kind of losing points every year is a big issue. And that's actually already been happening over the past decade, where most of the past decade you did not get positive real yields by holding either T-bills or cash in a bank. And it's kind of accelerating here in the 2020s. And so I do think that overall, fiat currencies are not a good store of value, especially in this current environment. I've been using Bitcoin as a diversifier, but essentially what Bitcoin is basically a technological invention that can make basically it solves digital scarcity, right? So it's like a digital asset that can't be copied. And it's a bear asset, much like gold or much like physical cash. And so we've seen over time that ever since it was created, ever since it became liquid enough to have kind of a measurable price, it's had this rather exponential increase in market share and value. And so what this chart shows is the Bitcoin price in log form. And we see that there are generally a few different cycles. And so far they've correlated. It could be correlated with the pre-programmed supply flow halvings. And so Bitcoin is programmed every 4 years to reduce the issuance of new Bitcoins generated every 10 minutes by half. And so what that generally does is that causes, supply goes down, or at least new supply goes down, while demand is kind of at a steady state. And so you start to get the next bull run. And so far, it was created in early 2009. And so we have over 12 years of it functioning well, it gaining market share. And the way I describe this is that we're essentially seeing Bitcoin being monetized in real time. And so we don't know how this trend is going to end, but so far we have 12 years of history, essentially going from zero up to at one point was over $1 trillion in market cap, now is in the upper several hundred billions. And so we're seeing this kind of this long process play out of it becoming an asset class in its own right. Now, as someone, I'm arguing the pro Bitcoin position here. I'm actually, I've been a gold investor for many years, so I actually like both Bitcoin and gold. And my overall viewpoint is that essentially they have different pros and cons, and that Bitcoin brings a lot that's new to the table. And so this chart is from Vijay Boyapati. He's a former Google engineer. But anyway, he put a table up showing Bitcoin versus gold versus fiat currencies and their various pros and cons. And I'll focus on the Bitcoin side. Now, what Bitcoin brings to the table is a couple different variables where it's actually stronger. And so it's far more portable. In fact, gold's lack of portability was part of why it got centralized in the first place. So banks would issue banknotes that are, tied to gold rather than people carrying around the gold themselves. That's what made it more divisible, and that's what made it more portable. For example, if someone were fleeing a jurisdiction, right, and going to another jurisdiction across international borders or through an airport, good luck bringing, 5 figures or more of gold with you. Whereas Bitcoin can be brought through on a smartphone, it can be brought through by remembering 12-word seed phrase in your head, and so it's a very challenging asset to be stopped or confiscated. Bitcoin is also more censorship resistant, right? So it's actually harder to confiscate Bitcoin or to block Bitcoin-based payments than it is to do so with gold. And so a classic history of gold was that it was often confiscated history. It was often stored in centralized areas that were then, taken over. Whereas Bitcoin is actually, for people that know how to handle it properly, is actually very, very hard to confiscate. And so you see things like, for example, the Russian opposition leader, his bank accounts are often shut down, but international supporters or domestic supporters can still sometimes send him Bitcoin, because that's actually very, very hard for systems of power to block, right? So it's actually, showing a degree of resiliency that is hard to mimic with other assets. The neat thing about Bitcoin is that it's a digitally native bearer asset. So in this world, it's increasingly focused on e-commerce, long-distance payments, and things like that. The fact that Bitcoin is digitally native is very important. So you can transact with someone trustlessly using Bitcoin over the internet, whereas you cannot do that with gold. If you were to try to use gold for that purpose, you'd have to rely on centralized third parties, either to store the gold or to convert it to fiat on the way. Whereas Bitcoin is actually a digital native bearer asset. And same wise, it's also more verifiable, right? So gold coins are generally pretty easy to verify, but verifying a gold bar, to be sure, you pretty much have to melt it down and check the whole thing. Whereas Bitcoin is programmed to be easily verifiable. So any full node can check on the whole blockchain to see if certain Bitcoin are indeed genuine. In addition, it's also auditable. So if I wanted to prove to someone that I own a certain amount of Bitcoin, maybe to get a loan or something like that, to prove that I have assets to correspond with that, I can easily digitally sign and show, with proof on the blockchain that I control a certain amount of Bitcoin. Bitcoin's also more divisible, right? So it can be broken down into 8 decimal places. That could even be changed in the future if need be. That you can divide it further, and that of course doesn't mean that you inflate it. That means that basically, kind of like how you can break an ounce of gold into grams of gold, right? You can or atoms of gold even, but of course it's not economically feasible. Bitcoin is just divisible. Each one is divisible into very, very small components that have a variety of use cases. Another thing I like about Bitcoin that I think is worth pointing out is that over time Bitcoin keeps getting stronger, right? So when you own Bitcoin, there are thousands of people working constantly to make it more useful. My base case is over the next 3 years or so to see continued dollar weakness, and then next I'm watching to see if it breaks past the early 2018 bottom that it had against some other currencies. And so if you're holding cash in a bank, probably 5 years from now, you're going to have notably less purchasing power. Whereas Bitcoin is programmed to be easily verifiable.